So today's video is about ARK Invest and their money manager, Cathiewood. So I'm gonna remove some of the mystique around investing in ETFs and also around the fact that some people might think you need to be a genius to make money in the stock market. So by showing you what type of companies they invest in and also their thesis around how they invest. Hopefully, that can give you some confidence in stock picking yourself, and also if the type of picks and you do and the analysis you have done uh, is similar to what this enormous company is doing. I'm maybe you are onto something in terms of how you are analyzing moat, etc. So first, we just listen to shortly in this all in summit interview with Katie Wood and their investment thesis, and after that we just enter um, their best performing ETFs and break down the type of holdings they have, just to provide you that insight that might give you an edge out there. So let's go.
Yes, yes.
Cassie, there's a lot of market signals right now that are flashing green. There's a lot of market signals that are flashing red. Do you feel that you have to position actively to all of those things, or do you say, you know what, I can't control this, I need to look 5 years out? So how do you manage the risk, and how do you view the markets today?
Yes. So the risk question, obviously, we get a lot because our portfolios are volatile. They don't look like the benchmarks. And when markets get into a bearish period, investors tend to hug their benchmarks, and we're moving in the opposite direction. So I just want to say we do what we do, and that's what our advisors expect. They don't expect us to raise cash or do anything. That's their decision, right? In terms of what we do to control risk, during bear markets, we will concentrate towards our highest conviction names. We have a scoring system based on management, execution, moat or barriers to entry, product service leadership, valuation, importantly, and thesis risk. So with those scores, we concentrate. During bull markets, which I do believe we are in a bull market that is broadening out, we tend to diversify because the IPOs start appearing again, and we have more information on some of the companies we've sold during the bear market.
Give us the read on.
And I think some of the things she said there are universal truths, that when it's a bear market, the high conviction picks for you is the easiest one to pile money into and not to sell. That is why I'm telling you to do your own due diligence and always understand your company through and through, because it's often if your company long term is succeeding, if you can pile money into that company when you are in a bear market, that's how you make some real money up there in the stock market. Obviously, ETFs, etc., has a lot more money, so it's easier for them to do that type of. So this is the homepage of ARK Invest. You can see here it's quite flashy. They are having ARK Venture, and they are stating their investment strategies. So crypto assets, currency, innovation. We need to zoom out here. You can see it's fintech, space, mobility as a service, etc., etc. So this is how they strategize, and through that they have created different types of ETFs. This is all of their ETFs, and I'm gonna show you the best performing ones. But also, before we do that, just see this 10-year return here on the ETFs, just to make you understand that they are performing very differently here. So a lot of here we do not have any benchmark, but we have in these four the genomics, the innovation, the autonomous tech and robotics, and the next generation internet ETF. And you can see if you pick genomics, the latest 10-year return, this is like the compounding returns, so that's 5% per year. So that's underperforming the S&P 500 by a lot. So if you pick genomics because you think, oh, the future is here with genomics, cure for cancer, etc., if you pick that hyped ETF, you would have underperformed the market. So that would be maybe troublesome for you, even though at least you were making money. But if you're were picking the normal ARK Innovation ETF, 15%, quite similar to S&P 500. If you had the autonomous tech and robotics, you would have 19.6% return in 10 years. So that's better than S&P 500. And maybe the most hype one, then the next generation internet ETF, that's almost 23% analyzed compounding return. So I think this is the two picks from ARK Invest that has made Katie Wood really famous and provided some credibility to her work. But you could also tell that some of the ETFs has same or worse return that S&P 500. So if you just put money in an index fund, you are almost as good as a genius at the Wall Street. So that's the first thing. Secondly, I'm not the genomics. I will not just go into that and break down the companies. I'm not that good at genomics, but as you see, the risk for me is way too high. But I'm gonna watch that these two and see if it's any strange holdings in here. Maybe analyze the top 10 holdings, or is it just famous companies that has pushed the valuation up here? So that is what we're gonna do. So let's start with the autonomous tech and robotics ETF here. So here you have the ARKQ. Yes, some exposure to innovation, aims for thematic multi-cap exposure to innovation elements, including robotics, autonomous vehicles, energy storage, 3D printing, and space exploration. So you need to, you can't just read here at autonomous tech and robotics. You need to go down and see what's really inside the ETF. And obviously, it's a long-term growth potential. Yeah, and we go down here to see. Here they are saying it's a great return. We already know that. But here's where the more interesting stuff comes. That the top 10 holdings in the ETF. So we have Tesla. We know Katie Wood is an early adopter of Tesla. A big she has a conviction that Tesla will be a $5 to $10 trillion company in 10 years. So she really believes in Tesla, autonomous driving, etc. And also that is where they put their money. So obviously Tesla is maybe the company has really pushed the valuation of ARK Invest long term to outperform S&P 500. So you need to have these predictions and big picks if you're gonna outperform um, the average indexes. Then we have some, at the moment, a lot of defense stocks. So we have Kratos and also AeroVironment. And I think Trimble also is in defense. So we know that defense and innovation are quite close, but it can be a bit controversial for some of you. So before you pick an ETF, you might not think that, oh, ARK Invest is actually investing a lot in defense stock. But here, despite these normal autonomous tech and robotics, it's actually a lot of the top holdings is in defense. Also, Palantir is AI in defense, so that is also a bit controversial. Teradyne, I think, is like testing equipment for semiconductor industries. We have Amazon. Everybody knows about them. AMD, that's GPUs. Most of you who follow this channel know AMD. And yeah, that's the top 10. We have Rocket Lab. I think that's a space company similar to SpaceX, but yeah, a lot smaller, obviously. So it's no rocket science why this is overperforming, because we know that Palantir has really outperformed the marketplace, and Tesla has outperformed over 10 years the marketplace. So they have two picks here that has performed really, really good. Even though I think Palantir, they have not have them like for 10 years. They have just increased that lately. Palantir has connections to Israel and the tech from Israel, and I know ARK Invest loves to invest in Israel. They have stated this many times that it's a country for innovation, for tech innovation, etc. We know that Mellanox, that Nvidia bought, was an Israeli company, so so they have some connections that you need to know before you invest if you think about those things and not just making money. So a lot of defense, a lot of tech, some Israeli components, etc. So that is the robotics ETF. A lot of autonomous mobility. They had Archer, I think, here also. That's That's mobility, autonomous mobility, and some battery technologies, next gen clouds, robotics, etc. So it's not super strange companies that they invest in their best performing ETFs. And also we have the best one, the ARK W, exposure to multi-cap exposure, innovation, internet technologies, cloud computing, big data, digital. This is like the thing of the latest 5 years. If you invest, the big amazing 7 companies, the biggest in the world, they are like in this type of tech. So this is basically the top 10 holdings of ARK W, ARK Invest W. Tesla again, they have Tesla here. They love Tesla. Tesla has really outperformed for them. I think Tesla at the moment is, in terms of execution and sold cars and battery deployment, not performing extremely good, but the stock is still performing good. So there are a lot of money behind Tesla to keep pushing it to higher highs, a lot of belief in the taxi network, etc. Then you have Roku. I don't really understand Roku too good. It's like having the device at home to stream, etc. But I don't understand the moat, because ARK Invest are talking a lot about the moat. So Roku is not a company that I have aimed to invest in, but they have a lot of money in Roku. It's the third biggest in this big ETF. Coinbase is a conviction in cryptocurrencies. They have performed a good the latest 10 years. Roblox in gaming is you run around inside a game and interact. I think they earned a lot of money during the IPO, but the stock since then has not performed super good. Shopify is a very good e-commerce platform around startups in USA. A solid pick, I would say. Robinhood, money trading, etc. Uh, Most of you probably know what Robinhood is if you watched this video. Then AMD again. So I've heard Cathiewood talking about AMD. You can see that I know that she has had Nvidia before. So Nvidia has also pushed over the years this ETF very, very high. But now when Nvidia is like almost $5 trillion, they have started to change Nvidia against AMD, probably thinking in similar like I do around that specific company. It's just that the research I have done for AMD, they have done for like thousands of companies, and this is the top 10 list they have ended up with. Palantir, I never understood the super hype with Palantir, and that's why I didn't make enormous money in Palantir. I thought it was an AI defense company with sticky government contracts, but I didn't have any proof that they had that edge in terms of innovation. So I thought when we were seeing the government of USA saying they're gonna stop spending money in Pentagon, that Palantir maybe would slow down a bit. But obviously, it was the different approach. They ramped up the spending, the AI, the surveillance, etc. And now we know Palantir is also collaborating with Nvidia, so they are performing good. But the company is getting a lot. A lot more valued in terms of market cap, so it will be harder for them to just keep climbing like they have done the latest 2 to 3 years. So that is my take here on the ETFs. They have some cloud, intelligent devices, cryptocurrencies. So this is quite similar to how I invest, but I don't have the same companies. I have AMD, but that's the only one here I have. But I can see this not very extremely strange ticker symbols here. So hopefully this brought to you some insights and demystified how they are investing, and you can just analyze all these companies yourself and see if it's something that you would like to dip your toe in. This is their high conviction picks, so they have obviously done a lot of research and put money behind that conviction. But as of me, for example, it's a lot of the companies I don't exactly agree with, but a lot of them has performed greatly over the years. So I would say hopefully this provide you with a little bit of that total knowledge you need when you enter the stock market, and to not get too what can I say, anxious about things that's going on in the macro environment. When you understand and build your map of awareness of everything that's going around, you can just relax and do the correct type of stock picks, or not buying anything at all, piling cash, investing in companies you believe in, and especially do your own due diligence. Long term, you're always responsible for your investment. Don't blame anyone else. Don't blame a YouTuber, etc. Just take in the information you like and disregard what you don't like, and there you go. That's my tip for you today, and I'm glad that you tuned in if you're still listening. So the whole video, fantastic. Don't forget to subscribe and drop a like, and watch my other videos. I'm very thankful. So